Have you ever driven past one of those giant wind farms, with the turbines spinning for miles? Or seen a huge solar park and just thought, who on earth pays for all of this? It's a really good question because shifting to clean energy takes a truly massive amount of cash. So today we're going to follow the money, from a small investment by your neighbor all the way up to a global boardroom deal, to figure out what's really powering our green future. Our story is going to start right here, on the ground. This is Hepburn Wind, and it's Australia's very first community-owned wind farm. So it's not owned by some faceless utility company, but by the actual people who live nearby. It's a pretty powerful idea, and it brings up a really basic question, right? So how do you get from a great idea in a small town to a huge spinning turbine that's making clean power and, earning money for the community? Where does that initial investment come from? Well, we are about to pull back the curtain on the whole financial machine that makes the green revolution go. Okay, let's start with that first layer, the most local one, community power. This is where it all begins, with individuals and neighbors deciding to build something together, for themselves. And this is the core idea, literally. It's called community-owned renewable energy, or CORE for short. And it's about so much more than just electricity. It's really about democratizing energy, giving local folks a real stake in how their power gets made and how the profits from it get shared. And the benefits here go way beyond just clean electricity. When you keep the money inside the community, these projects make the local economy stronger and they create jobs. They make the whole community more resilient, they shrink the local carbon footprint, and they teach everyone involved about our energy future. It's a win on so many levels. Okay, that all sounds fantastic in theory, but let's be real, these projects still cost millions of dollars. A small town can't just write a check for that, so where does the actual startup capital come from? And that's where a pretty cool modern tool comes in, crowdfunding. What it does is break down a massive investment into these tiny manageable chunks. So instead of needing one millionaire investor, you can have 1,000 people chipping in whatever they can, usually through a simple website. It really puts the community back in community energy. And this quote from CVE Group just nails why this is so appealing. You're not buying some abstract stock on the market. You're investing in a real, tangible thing, a solar panel, a wind turbine that you can often go and see in your own area. You're literally connecting your savings to the real green economy. Okay, so that's the grassroots level. But to really get the big picture of renewable energy funding, we have to look at the biggest players in the game. Corporations. These are the guys driving growth on a truly massive scale. And this number, wow. This one number basically tells the story of the new world of clean energy. A whopping 83% of all the big electricity contracts, these power purchase agreements signed in Europe this year, were not with old school utilities. They were with corporations. Companies have become the main engine of growth here. So how are they doing it? Well, the main tool is something called a power purchase agreement, or a PPA. Just think of it like a company signing a huge long-term subscription for electricity. They promise to buy power from a new wind or solar farm for, say, 15 or 20 years at a locked-in price. That guarantee of future income is exactly what a developer needs to show a bank to get the loans to actually build the thing. Now, this is really important. Not all PPAs are the same. A physical PPA is pretty straightforward. A company buys power from a project nearby and uses it. But a virtual PPA is a really clever financial invention. The company doesn't actually use the electricity. Instead, it's a financial bet. They lock in a price, and if the market price goes higher, they get paid the difference. If it's lower, they pay. It's that financial guarantee that gets the project built. And it lets companies support green energy literally anywhere in the world. And we're not talking about some obscure financial product here. We're talking about huge household names. Tech giants like Google are using these PPAs to power their enormous data centers, and big retailers like Tesco are using them to keep the lights on in their stores, all while hitting their big climate goals. So we have communities, and we have corporations, but what about the ginormous pools of money you need for projects that span entire continents? For that, you need an even bigger set of financial tools. This is the toolkit for the big leagues. First, governments often jump in with grants and subsidies to help lower the risk at the start. Then you have things like green bonds, which let huge investors fund stable, large-scale projects. And finally, you've got private equity and venture capital, the risk takers who fund the really cutting-edge startups in new tech that could change everything. Let's just focus on green bonds for a second, because these things are a total game changer. They work just like a regular bond, but the money that's raised is guaranteed to be spent only on green projects. This makes them super attractive to giant investors like pension funds that have to invest billions of dollars safely, but also want to meet their own sustainability targets. So this all sounds pretty great, doesn't it? You've got a perfect system of funding for every level. But, in the real world, getting these projects built is incredibly hard, and there are some serious economic headwinds out there that can stop a project cold. And the numbers on this chart, they paint a pretty stark picture. See, because wind and solar cost so much to build up front, they are extremely sensitive to interest rates. A study found that if interest rates go up by 5%, it barely even affects a natural gas plant. But for a new wind or solar project, it could increase the total cost by a third. A third! That's often enough to make a promising project suddenly unprofitable. And interest rates are really just one piece of the puzzle. Developers are also facing a whole minefield of other challenges, like trying to navigate confusing and ever-changing government rules, paying a fortune for grid upgrades just to plug their project in, and then having to wait years, sometimes even decades, to see a return on their huge investment. So, yeah, it's complicated. But I want to end this by circling right back to where we started. This quote from Margaret Mead is just such a powerful reminder, because while all the big money and the corporate deals are absolutely crucial, that initial spark, the real drive, and the political will to get things done, that often starts with small groups of committed people. Ultimately, what we've seen is that the financial toolkit we need for the energy transition, it's already here. It works at every single level, from a local citizen buying one share in a community solar project, all the way up to a global bank buying $1 billion green bond. The mechanisms are there. So the real question we're left with isn't how we can fund the clean energy future. It's how fast are we willing to do it?